So good evening to all. On behalf of the Georgetown Club of France, and most importantly, the participants from other schools represented here in France, who sent their best and brightest to come and join us today. You are in front of a distinguished panel who will be talking to you about one of the two topics that's the only thing that's certain in life. There's death and taxes. We'll be talking about taxes, but then we'll be talking about wealth as well from the perspective of US citizens who no doubt will be faced with a flurry of taxes that they may or may not know about in terms of their responsibilities of being a resident in France. So indeed, this is the chance for each of these speakers to make their comments in roughly 45 minutes. You're welcome to interrupt and ask questions, but it might be best to hold it to the end. It depends upon the format here. Last but not least, each one of them will make an introduction to them on behalf of their organizations and themselves. And last but not least, please note that the event is being recorded for the purpose of allowing those who couldn't come tonight to watch. And it will also allow you to access the slide deck this way as well and be able to follow up with these gentlemen should you choose to do so. So with that, thank you for your time.
Thanks, Bill.
Thank you very much. So we're going to introduce ourselves. Adam, you want to start?
Sure. I'm Adam Myers. I work at London Capital. We are a global wealth manager. You might tell by my accent. London-based, but we've specialised in serving the US community for over 30 years. We used to have an office in Miami. I joined the firm 16 years ago, and over the last 7 or 8 years have primarily focused on working with Americans based in France. So nice to meet you. Looking forward to speaking.
Thank you. So my name is Jérôme Assouline. I am a partner at Secret Valentin Zero, the hosting law firm. I'm the head of the tax department, and myself, I specialize in tax matters and with a special focus on US persons living in France or having investments in France. And in fact, I'm dual qualified in France and in New York. And happy to welcome you tonight.
Hi, my name's John Solitis. I've been living in France since 2017. My wife is French-American, hence my excuse for being here. And I run a small equity research boutique. I advise professional investment managers, hedge fund managers, pension fund managers, etc. And I'm also a registered investment advisor in the state of New York, and I manage money for individuals. And I'll be talking a little bit about portfolio management and investing in equities.
Thank you. My name is Diego Pájaro. I'm originally from Argentina. I live in Barcelona in the European office. I work alongside with Adam. I'm also executive director and advisor for the firm. And I've been working in the industry for more than 18 years. Now 2 years with London Capital, and we opened this office that's regulated by the SEC, by the FCA, and the CNMV because MiFID II compliance. Thank you.
Thank you. So we're going to cover a number of things, but I think we have only 45 minutes, so we'll probably be quick on most of the issues. We want it to be interactive, so feel free to stop and ask questions at any time. And of course, we can have then more individual conversations after the presentation. So I'll start with some general comments. Oh, no, maybe you want to,
Sure.
to introduce.
We just thought we'd give a bit of an overview, which I'm sure as most of you Americans living in France are well aware of. But there are around about 300,000 Americans living in France. And that's made up of a wide variety of different people, long-term stayers, short-term workers, and students. But all of those have similar issues, especially when reporting their tax affairs and their financial investments. And that is because, as an American citizen, you have to adhere to the US worldwide taxation rules. And that also includes the reporting and the investments that you can hold. France is slightly different, and taxes on having assets which are French citus or a taxpayer's residency being based here. Over the last 20 years, there's been a wide number of regulatory changes that have happened in the US, in my sphere in the UK, but also here in France and in Europe. And that has caused a lot of problems for Americans living overseas. You saw that initially with the FATCA rules, which had the HIRE Act within them, which was really the start of the issues that a number of Americans faced, where people working in Europe could no longer work with US connected people. And then you had the MiFID version 1 and then MiFID version 2, and then also the changes to the EU succession rules, which all of these have kind of encompassed a raft of changes and challenges that you will need to face and come up with solutions for. Linked to that, you have some of these structures that people in France typically use, so things like assurance fees, etc., which normally as a Frenchman you'd use to effectively manage your assets. But these do cause issues. One of the things that we're going to talk about today is how do you as Americans utilize, or don't utilize, things like trusts, assurance fees, brokerage accounts, IRAs in the most effective way on a worldwide basis.
Excellent, thank you. And from a tax perspective, I start by saying that there are two treaties in place between France and the US. There is an income tax treaty, but there is also an estate tax treaty, which is not the case with many countries. And those are very positive features. And I discussed one before I discussed some complex situations. But one huge benefit you have as a US citizen living in France is that on investment income, if your income is from US source, you're only taxed in the US and not in France. There is a system of tax credit, the result of which is only taxation in France. And so from that point of view, and we'll discuss that probably more later, it's more interesting to invest in US source assets than in other assets from a tax point of view.
I bet people didn't think there was going to be good news right at the beginning.
So there is one.
Hopefully there's more.
And it's in fact more interesting than being in many states of the US, because if you're in a state where there is state taxation, you're better off in France, where you would pay only US federal taxation plus the Obama tax, the investment tax. So it's a 23.8% taxation against 30 to 34 in France, and more in many states of the US. So that's a positive news. Now, unfortunately, often, yes. Often you come in France with trusts. As I'm sure you know, trusts do not exist in France. We don't have that concept. But we do recognize foreign trusts, including US trusts, but they create a number of complications. So I could do the full presentation on this, but one difficulty, for instance, is that from a French tax perspective, they are viewed as opaque and not as pass-through, even if they are pass-through in the US. So you can have a situation where you're taxed on the income on a yearly basis in the US and not in France, but then when you get a distribution, you're taxed in France, even if you don't have taxation in the US at the same time. So it can result in double taxation. Also, from an inheritance tax point of view, if you form a trust while a French resident, you're hit by an automatic 60% inheritance tax when you die. So you should not create trust except in very specific circumstances while you live in France. And then it's probably more known from everybody, you have a specific reporting obligations for trustees of trusts who have a nexus with France. So it's a French resident beneficiary, a French resident settlor, or a French resident trustee.
Or property.
Or property, sorry. That's just a reporting. There is no associated tax except in specific circumstances, but there is a high penalty if you don't file that report in due time.
have they actually penalized like foreign trustees yet, like American trustees?
Well, so our experience is that when we file returns, even late, they don't penalize. Where they penalize it's when they realize that you've hidden assets and income, and so they tax the income, they tax the assets, and they ask for the penalty from the trustees.
But are like they going mostly after like French, or because for me, we're doing this, but for me the thing is like, you know, if it's a completely American thing, how do they know about it? Typically, you know.
Well, because you have to report.
Well, you have to now, but like for like you know, it's an American settler, it's an American trust, it's got you know, American assets, and then just by virtue like some beneficiary happens to move to France. I mean, I can imagine there's lots of people that have no idea about this.
It's been around for a long time, 10 years now. I think most, at least professional trustees, they would know about it. If they are individual trustees, maybe not. But they would find out when the French resident beneficiary would consult an attorney. So my experience is that most trustees, they do comply.
What if the assets belong to, so the trustee is not the owner of or the beneficiary of the assets, but it's a trustee for a brother or a sister? But the trustee is resident in France. Does that apply?
Yes, if you're a trustee.
And I think what's happened over the years is there's been more and more information shared across different jurisdictions. And this kind of goes back to when they had the Hire Act and the FATCA rules, etc. In the UK, where there were a lot of Americans at the time, the common question that we had was a similar one. You know, if I don't declare my foreign assets, what would happen? You know, if I put a foreign address, if I put my US address on my account, they'll never know that I live here. And it's just become more and more common for these things to be found out. And I think it's, my view anyway, but I assume Jerome's as well, it's better to become compliant than kind of kick the can down the road.
Yes, because, and that's what we do on a daily basis. There is planning to go fine with these rules. It's just that if you do US planning without taking into account the French rules, then you can be hit by taxes and penalties. And you have the same complicated situation with with some other entities, corporate entities or partnership in the US, which can be considered transparent under the treaty we have with the US. But France consider that they have to look at the treaty to see if they have the right to tax. But once they know they have the right to tax, then they apply French domestic law to determine the type of taxation they can do. And so they analyze entity by entity. It's called the assimilation principle, which was ruled several times by the French Supreme Court, Conseil d'État. And so the French authorities, they do their own analysis of the entity to see if it has, for a French perspective, to be considered a pass-through entity or an opaque entity again. And again, it can result in a situation where we don't do the same analysis in France as they do in the US. So for instance, we would view general partnership and limited partnership generally pass-through, but we would view, LLCs and subchapter S corporations as opaque, even if they are considered transparent in the US. So there is specific work to be done when you have these type of entities who are living in France. And then a remark regarding wealth tax. I'm sure you're familiar with it, but so we used to have a general wealth tax. Now we have only a wealth tax on real estate, but it's on worldwide real estate. So if you're a US person living in France with assets in the US, you're taxed on the value of your French assets, but also on the value of your US assets, except for the first 5 years of residence. We have a initial period of residence during which you're only taxed on your French assets and not on your foreign assets.
insurance, does that include things like real estate investment funds?
Yes. So these were general developments, and I would like to do a case study with you.
Yeah, so we made a number of assumptions here, but we thought it'd be good to kind of structure it somewhat around a bit of a case study. So we kind of said that Chloe and her husband Philippe are married. Chloe is 52, is a US citizen, and moved to France 13 years ago, something like that. Philippe is not a US citizen, and he's lived in France all of his life. And I think that's a common background to what we see with a number of clients and families that we work with. The couple have got a couple of two children who are 12 and 15 and both are dual citizens. They've got an apartment in Paris valued at €2 million with a €1 million mortgage, which is quite important, which we'll come back to later on. Chloe used to work in the US and has an IRA, which was rolled over from a 401k, valued at about $250,000, and a brokerage account also based in the US, valued at $1 million, and that was held in a trust. As part of buying their property, Chloe was persuaded to take out an insurance fee, which was tied to the property purchase. And her husband has an investment account with HSBC, which may no longer be with HSBC, valued around €500,000. They plan on living in France for the long term, and Chloe, as she's now retired, would like some of her income in euros, because most of her income previously was from her role before she retired. Chloe and Philippe have a will in the US, but are unsure of the rules given the forced heirship rules that are applicable in France.
Well, Chloe has an IRA and brokerage account in the US administered by Vanguard. The brokerage account is held within a US living trust. The portfolio are made up of a mix of US mutual funds and directly held securities. Chloe also has a small assurance fee. There is a typical product for French on a tax perspective and also for inheritance tax, tied up to couples properties. Philip has an investment portfolio in his own name, managed by his French bank, HSBC, and Chloe has her day-to-day banking with them. There are a growing number of challenges with the US and French financial providers, and what they are they? Where should they custody my assets, and what is the benefit of holding US C2 assets? Are they positive for an American in France holding direct investments? What is a PIFIC? Does an insurance fee provide the same benefit for a US person as a non-US connected individual? Is now a good time to build a multi-currency approach?
And those are some of the key kind of questions that we see when dealing with clients. I think in terms of the first two bullet points, it's very, very important. And a number of clients have reached out saying that their banks have closed their doors to them. And we saw this really over the last decade, but even so in the last few weeks, 6 weeks, etc., HSBC have turned around to a number of clients and said, we can no longer work with you. And on the US side of things, a lot of US institutions have also said, because we're living in France, we can't manage your assets anymore. And Lucy touched on it a bit earlier, that some clients had said, well, I can put my mother's address, I can put my dog's address, whatever it may be, on the US brokerage account to get around it. But unfortunately, it's becoming more and more common for the banks to, either by tracking IP addresses, etc., say, we know that you're not living there, and you need to find some sort of solution.
This is a bank in France or a bank in the US?
In the US.
Oh, okay, okay.
And so I think one of the challenges that we found is, John and
In France too?
In France too,
Yeah.
exactly. Is it's really important to partner with firms that are actually committed to working with Americans, because as time goes on and the regulatory changes continue to happen, it's only going to get more challenging. And so that's kind of one of the things that we found. And that comes down to, again, one of the points that Jerome raised, where should you hold your assets? And what type of underlying assets are most effective for you as an American living in France? And as Jerome touched on at the beginning, it is most effective and simplest to have your assets in the US in terms of French tax and US tax. And holding US citus assets, which effectively means US stocks and US bonds, you effectively don't pay tax in France on those. You pay US tax on them. So it makes things a little bit more simple. The bit you do need to consider though is, although you don't pay tax on that part, it is still part of the calculation that forms part of your French tax. So that is something.
How does that apply to dual nationals? I think there are a few of us that are French American here. So for
Yes.
instance, in the situation you just gave, not example, yes, it makes more sense to have everything in the US, but how are you then viewed as a French national also having those assets in the US?
So that's the same.
So you do have the same benefit being a dual national. It's the mere fact that you are a US person that entitles you to be taxed only in the US on this type of income. And unfortunately, because you're subject to the two systems, opening with a French bank, they will only open to you if they accept US clients. The fact that you're a French person does not change that.
So you would say it's best to just keep most assets US-based portfolio?
So yes, or specifically with a bank in France or in Europe, which accepts US clients and which know how to deal with US clients in terms of investments.
So the key is the situs of the underlying asset. So a Microsoft stock, for example, that would be taxed more beneficially for you as an American living in France.
So speaking of French banks that are okay with Americans, I think many of us probably use HSBC, which is divesting its French assets at the end of the year. Any banks you might recommend?
I think that's an individual conversation to have after this general presentation.
Okay.
It's becoming more and more challenging, in all honesty. But we can discuss it after. I can give some examples of where clients have done it. Depends on your situation. But we can come back to that after. One of the questions, again, that comes back to is holding direct investments. And there's a big split, and we can discuss about the merits of the direct portfolio between holding funds and direct stocks. And we'll come back to that a little bit later on in the presentation. Are any of you aware of what a PFIC is? Passive Foreign Investment Company.
I think one knows.
If you stand up.
You can present
That's
Is
complicated.
any type of vehicle that holds multiple other underlying assets that is a passive income vehicle?
Exactly. There isn't rubber stamped by the US effectively, that it's come from the US. So one of the issues that people who are based here come across, and again we see it quite often with clients, is you have your US manager managing the US assets, and then you have European assets that you get a private bank who is happy to work with you, and they start building out a portfolio for you, be it a brokerage account or one of the structures like an insurance bid. A PFIC, a passive foreign investment company, is effectively going to be taxed at highly disadvantageous tax rates, and effectively at your highest rate of income tax in the US, and it's taxed annually on a mark-to-market basis. So if it grows from say 100 to 110, each year they will tax you on that 10% gain at your highest income tax rates, and that's without crystallizing it. So there's very limited benefit for holding it, and in addition there's a lot of additional reporting requirements that you have to file each year. So the kind of common consensus is that you try to avoid those type of funds in Europe. So you invest directly into European stocks or bonds if that's the approach you want to take, or invest directly or by ETFs in the US.
Sorry, and then I'll take your question, but the typical PFIC would be an assurance vie in France. because the US rules would make you taxable on the gains inside the assurance vie under the rules which were just described and which are very unfavorable.
Does everyone know what assurance fee is?
Sorry.
So my question is around intéressement and participation, because a lot of French employers include that as part of compensation, and because you can contribute to that without directly and therefore not be paying the French taxes on it, it's seen as advantageous, but you don't necessarily control what that's being invested in. Is that considered a PFIC, and does that mean that the tax benefits given from that are completely not worth it and you should just be asking for it in cash?
So I must say, I've seen intéressement et participation being PFIC, and I've seen not being PFIC. So it depends really on the nature of your specific contract, and that's something to be reviewed with your US accountant.
And that again, from talking to tax advisors, etc. We talk about the assurance fee in a broad terminology. They will say it's on a contract by contract basis. The difficulty is that to review it on a contract by contract basis becomes very expensive.
Would a pair qualify as a PFIC?
Yes.
Yeah.
Yes,
Okay.
for sure.
I have a question that's maybe outside the scope, but maybe you know, having worked in this industry, what is the rationale from the US government for this designation of PFIC? What are they trying to do?
They want to, because they think whatever you invest abroad is not a good thing, and they want to encourage you to invest in US products, and so you don't get the same treatment when you invest abroad. But generally,
They don't really know what's in it, is it effectively, and because they don't trust what in it is and trying to avoid some sort of tax, etc., they're going to penalise you for it.
The assurance vie in France is used for estate planning in terms of, leaving things for one's children, etc. And so what you're saying is that the benefit of that does not outweigh the taxes that one pays to the US.
for sure not.
Okay. That's good to know.
Please.
As a corollary to the pair, so pair is definitely a PIF. I also assume that being an investor in any private capital fund here, like a private equity fund, would also be considered by, like a European-based PE fund would also be considered by, like, any carried interest.
Yes. Yes. Carried interest sometimes can be affected by other rules and not the PFIC rules, but PER for sure. We will discuss PER. So basically all the mechanism when you're not invested directly in equities and in bonds, generally I would say 99% of the case it's considered the PFIC. It's the mere fact that you have a foreign mechanism interposed between the investments and the taxpayer.
I think that kind of goes back to the difficulty in terms of specialist providers who kind of understand the US element, and then most people in France, or most private banks, etc., whoever's offering these type of structures, just look at it and say, as you correctly say, the assurance fee is the best tool for estate planning in France. You have to have one if you have assets over a certain level, and you want to, they're not thinking on the US piece. And equally on the US side of things, whilst it's a little bit simpler because most US brokerage houses are going to invest in US stocks or ETFs, etc., they're not thinking of the French regulatory side of things. And that kind of what Jerome mentioned before about real estate funds. If you have, when you pay the if you're then invested in funds in the US, which has a real estate element, that could actually add to that. So it's just about thinking, everyone, you kind of have to think on a global basis about all the different minutiae, which can be problematic.
I think the final point is more on investments, is whether you want to build a multi-currency approach.
It's we have the capability to make a consolidated reporting for the assets that the client has, so it doesn't matter if it's invested in US dollars or in euros or in GBP, we can manage to consolidate and make the reporting for the IRS in the US or for the tax authorities here in France. That is the
And I think on that multi-currency piece, the part that families often think, especially if they're staying for the long term, which this imaginary family are, it's all good and well having only US assets because it's more tax efficient. But when you're actually thinking about your life and do I need Euro assets, it's about weighing up the pros and cons of maybe paying a little bit more tax in terms of having Euro assets, but at least locking into having a Euro income or more of, or a bit of a hedge. And so that's kind of where you sit down as a family and you say, you know, what's my long-term goal? How many euros do I need if I do need them? You know, and weighing up the pros and cons of having just purely US assets, especially given the dollar has strengthened quite a lot over the last few years.
So can Chloe transfer her assets into Philippe's accounts and call it a day? I hope they don't get divorced.
Oh, that could be viewed as a gift from her to him.
But if they're married, can't she do that?
Or she can, but you can make a gift to your spouse. It's not, the fact that you're married does not make the transfer not taxable. And in France, gifts between spouses are taxed as soon as they are in excess of 80,000 euros.
I'm not a tax expert, I have to kind of caveat all of this and say we're not tax experts, it's just something that we obviously are familiar with because we deal with this quite a lot.
But I am. So.
Yeah, you are. But on the
He's allowed to talk.
On the US to non-US spouse, there's an exemption as well. There's only a certain level that you can do, from my understanding.
From US to a non-US spouse?
Yeah.
Yes.
I can't. It's about 140,000
Yes.
a year.
Per year?
Yeah.
Oh, that's excellent.
Vis-a-vis the US
Thank you.
government.
Thank you very much.
I have a question. Does the régime matrimonial, if you're married in France, have an effect on these assets and things like this? Are there differences between regime from a US perspective?
Oh, that's.
I know that's complicated, but
Yes,
in a nutshell.
but I'm happy
yeah.
to give a general view on that. In France, the régime matrimonial regime really is only a concern when you're divorced or when you die. Before, we don't really look at your matrimonial regime. In the US, they do, and so if you have, for instance, income in your name, but you're married under a community regime, from the US perspective, they would consider that 50% goes to each of the spouse. So if one of them is a US person, then he can be taxed on his 50%.
Even if the income is from a French national.
Yes, correct. I've seen a number of situations like this where a couple would be one US, one France. The French was selling a company with a huge gain, but they were married under the community, and 50% is considered as allocable to the spouse that is US.
I have a secondary question, but it's not my situation at all, but I'm just curious.
It's a
For
friend.
the two
It's a friend.
kids.
That's true.
For the two kids, when the assurance fee is over, like when, I guess the parent dies and they get dispersed, what are the implications for disbursement? If let's say Philippe had the assurance fee, he's a French citizen, okay, they disperse to the children who are dual citizens. Are they at the same disadvantage in terms of receiving the disbursement? I don't know if that makes sense.
I'm sorry, no, I'm not sure I followed the question. So the assurance fee is by Philippe, who is a French citizen?
Yeah, so he's okay in that sense in terms of taxation.
Absolutely.
Now the kids, once Philippe dies, I suppose they're gonna disperse the whatever's in the assurance fee.
To them, okay.
To the kids, who are
Yes.
both US and French citizens. Now, they never held the assurance fee, so they never saw the adverse effects, so what effects do they see?
So I don't think that's a problem, because in the US, they don't tax on receipt. They tax the deceased or the donor. So in your case, the children are US, they would be taxed in France, but not in the US.
Okay.
on what we're
Yes.
on time, so
We
we've got
need-
quite a few
we
exciting
need to
things
move
to get through. This slide is more on investing, which John can touch on and Diego too, but effectively Chloe's retired. On retirement, obviously she's looking at her assets and wants to make sure that they're managed in the most effective way possible. And the way I always look at it for US connected families is it's almost a gain of marginal gains and marginal benefits. So it's looking at how you can manage your pots as effectively as possible to get the best after-tax return. And I think part of that is obviously, how do you build a compliant portfolio? Compliance, maybe not the best word, but an effective portfolio, taking into account both US and French rules. And I think we have touched on that already, so I won't go into much more detail. But it's about building a portfolio, potentially of US citus assets or a mix of US citus assets, and euro-denominated assets that matches the ongoing income requirements, growth, capital growth, or capital preservation, whatever it may be. And I think, John will touch on it later, or you can touch on that as well, but in terms of how do you construct a portfolio efficiently, and what type of securities do you hold, and obviously we'll mention that. In terms of, when Diego and I see families who have retirement accounts and brokerage accounts in multiple jurisdictions, do you want to touch a little bit about how to optimize that?
Yes, well, there are some benefits of managing the IRA and brokers on a consolidated basis that, to make it more tax efficient.
Yeah.
Yeah. Well, as I mentioned earlier, we make this consolidated reporting, so we can practically go and see the whole picture of the client cross-border, because no matter what the assets are or what is the currency the client has, we can put it all together into euros or US dollars to make this reporting more efficient for the IRS or for the tax authorities in France.
And on that point, when we look at things on a global basis, we should be looking at it as a global basis as one pot. And so you can have whatever assets you have, 500,000, a million, 5 million, whatever it is, and you look at it on a global basis, you should be looking at it, how do you use the different pots that you have to your best advantage? And in terms of direct investing, you're going to be taxed on dividends, interest, capital gains, etc. So it's about optimizing that and saying, what do I have here in France or Europe, and what do I have in the US? And so when you look at having an overall asset allocation, which is appropriate for you as a family, the IRA and the retirement pots are an amazing vehicle, because you are growing those each year, compounding. And so effectively what you need to be saying there is, I'm going to put the highest tax assets I have in the IRA, effectively, and then you're growing that in the most effective way possible. So the way we look at things is you look at all your worldwide pots and then optimize it from an after-tax return basis. And that for me is I often see families and they send me their IRA and they send me their brokerage statement, and they're invested in very similar things, and it's not necessarily the best approach to have. That's the way I look at things. Jerome, do you want to talk about some of the...
I think maybe before discussing at the end inheritance, we can discuss the portfolio allocation, and John, what your view would be on an efficient portfolio, maybe more from an economic perspective than tax perspective.
Sure. So let's say you're going to invest in U.S. equities or equities in general. So you have a couple of different options on how you might want to do that. So first, you could buy the stocks yourself. So a quick question: how many of you have not bought a stock for yourself? Okay. Honestly, when I ask that to a French audience, it's like all of them. Okay, so secondly, second option, instead of buying an individual stock yourself, you can buy mutual funds. In my view, the issue with mutual funds is that they typically have a lot of hidden fees and transaction costs. And the biggest negative, in my opinion, besides the fact they normally underperform, is that if the star analyst that's responsible for the really great performance of the mutual fund leaves to start his own fund, they don't tell you. They have no obligation to tell you. Which is why the ETF industry has kind of come along and sucked up a lot of those assets. Generally, they charge the lowest fees, but essentially you just get the market return. If the market is overvalued, you have overvalued assets. You can't really avoid it. And a fourth way is you can work together with an advisor who can try to understand your own particular risk tolerance and investment objectives and construct a portfolio that is tailored to those conditions that you might have. And so just my particular strategy and discipline with regard to equity selection is that we look for very high quality companies with very good balance sheets, and we try to buy them opportunistically and hold them for the long term, have really high conviction level in the companies that we own. And we like to have concentrated positions rather than diversified positions and stay fully invested. And I think that the point is that to minimize your tax exposure, you want to take the longest possible holding period you can. And you want to transact as little as possible. So in order to do that from an equity standpoint, you really need to have high conviction about the companies that you own, and you need to understand the businesses that you're involved with so that you're not tempted to sell out of them or trade out of them, which creates these taxable events. Unless you have them in a tax advantaged structure like an IRA, where then you get a little bit more flexibility. But nevertheless, what you really want to do is compound your assets over the longest possible period with the least reporting requirements to either the US or France, for that matter. I mean, we can just talk on this a little bit. I mean, it is difficult to invest in equities on your own. Why is it so hard? It's not easy. If people tell you that it's easy, you should distrust them. It's hard to think long term. We're just not psychologically wired to do that. Trying to understand companies isn't that simple either. And you have a lot of volatility in the asset prices, which tends to make people emotional and therefore make bad decisions. Very difficult to avoid all those things. On top of that, I would say that the financial media and the financial industry are basically working against you in all possible ways. The purpose of the financial media, or the reason how they get paid, is basically by amplifying emotions and trying to get you to click on their headlines. So they're really incentivized to just trigger you as much as possible. And the financial industry gets paid on transactions. And so they want you to transact as much as possible with a short-term focus, which, as I just mentioned, is exactly the opposite of what you should be doing from an investing standpoint. So those are two big problems. You have the psychology working against you, and you have the industry also set up to cause you to do things you shouldn't do. So I think personally, it's better to work with an advisor or do it on your own. Okay. That's it for those.
Thank you. Just maybe before we can enjoy the cocktail, we want to say a word on estate rules and inheritance tax. Yes. Do you want to discuss that with me or
obviously in the US, you've got this situation where you have $12.9 million before the tax, roughly speaking, inflation linked, that you can pass down to heirs per person, so obviously very attractive across the couple, and a lot of foreigners try and take advantage of that. And the difficulty when you're here in France is the rules are completely different. So you have the forced airship rules here, which I don't know how many of you are aware of, potentially. Sorry? And that is effectively preordained rules that your assets have to pass to certain people at certain levels. And there's a very limited amount that can pass tax-free.
But so there are two different set of rules. There are what we call the civil rules, which basically is to whom can I give my assets. And on that front in France we have the forced heirship rule, which you don't have in the US, where you need to give a specific portion of your assets to your children. When you are a US citizen, one way to avoid that is to use a US will and to opt for the application of US law, or the law of one of the US states on your estate, and that makes US law applicable, not French law, and so French forced heirship rule does not apply anymore.
And is that for all assets or just US assets?
You can do that for all of your assets.
So let's say our friends Chloe, whoever, they have, so in the case, it's actually in the case that you have, so it's an apartment in France, and let's say a portfolio in the US, if they're passing, I'll just put it in my case, I don't really care, if a dual national passes down to dual national children, you can opt to put everything in the boat of US law and saying that French apartment and the US portfolio are all part of the US will, and that is the will to be applied.
Correct, but that's not for tax purposes. That's
No,
just
that's
still have to pay tax.
I know, I'm not, yeah.
exactly. Now you may have heard there is a new limitation on that, which is le prélèvement de l'article 913 du Code civil, which is a rule pretty recent, 2 years ago, in fact to prevent the fact that French resident children could not receive anything because of the choice of a foreign law. And so if you do that, the notary in charge of the estate will have to tell your children, if you want, you can still claim the forced heirship, but then it will be enforceable only against French assets, not US assets. That's a complicated set of rules, but that's very important to understand.
But this rule that you just mentioned about opting for a US application of law, that would only apply to who you can give to, right? So that if you wanted to get around, if you did not want to give to your children, or you did not want to give to them equally, you could use that, but that wouldn't change anything else. It's purely that forced heirship of this percentage must go to each child and so forth.
No, it would. If you do, it means that you don't have to respect this obligation to give to your children.
Right.
Yeah,
You
it's
still
only
pay,
about
you still
who.
pay tax.
But so you still pay tax, because in the US you have this 12+ million exemption. Do you know how much is the exemption in France?
100,000.
Oh,
That's my fault, so.
So even if you save on the US tax front, if you're a resident of France, you will be subject to French inheritance tax on assets in excess of that value.
In terms of the 12.9, that's a federal. Correct?
Yes.
And so, is there anything that states?
Yes, but
Different every state.
so in most cases it would not apply to you if you're a French resident.
Okay, that was my question.
So but that is, I think it mentions the sunset provisions in, I think it's the beginning of 26, which is going to halve it effectively. So from the 12.9 plus inflation.
So I just want to check my understanding is correct. So for the person who dies, if they're a US resident, they can still gift you that tax-free because the taxation is done where the giver is tax resident. Is that correct?
Correct.
Okay, so, and then my understanding, so for that lifetime exemption, that can be done as a gift before death as well in the US. How does France treat that? Because as a gift instead of inheritance.
So that's a different situation from the one we were addressing. We were addressing the situation of the US person living in France and living away either during her life or his lifetime or at death. Now what you are addressing is the situation where a US person living in the US gives or give by way of death assets to a French resident. So in France we tax also on the head of the recipient if he's a French resident. That's true in a number of cases. You can avoid that thanks to the treaty in place between France and the US, but that would apply only on US assets, not on French assets, and it would generally apply only if it's an outright gift and not a gift via a trust.
Because the trusts are taxed on that 6 out of 10 rule, right?
Yes.
The residents, okay.
Yes.
But I
But
guess.
sorry, if I give a simple example, so you have a US resident giving US stock for $500,000 to a French resident outright, that would be taxed only in the US, not in France.
And so in the treaty, does it say inheritance or it says the gifting as well, or they're two?
Both.
Okay.
Can if we're American living in France, dual citizen, can you opt for an American will if you're a French resident? If you're a dual citizen?
If you haven't drawn up a will, you mean?
Yes.
Yes, you can choose, you can decide between applying the rules applicable in your country of your residence or in your country of citizenship, even if you have the two citizenship. But you would need to show that you have a close connection to one of the US states.
How to do that?
Well, if you have
If you have family there, or if you have assets there.
That doesn't change the tax situation.
No, you still don't.
But nothing changes the 12 million to 100,000.
You have to die in the US.
Yeah, that's what
Basically.
you're saying at the
If
very
you die-
beginning. She already gave you the answer.
There are some sorry. There are some strategies to take advantage of the 12 million, even if you live in France. But these are complex strategies which I'm happy to discuss during the cocktail. Because I think we are running out of time and I don't want to.
Yeah, sorry that we overrun quite a bit. Thank you, William, thank you for organising, and thank you all for coming.
Yes,
And
sir.
we'll all be around to have a few drinks.
You just made your applause, so that was gonna happen. That's exactly what I was about to solicit. We could do it one more time, or you can also do it over time. So thank you again so much for.